Let's address the elephant in the room. Between November and December, Pi Network is unleashing 318.7 million tokens into circulation. That's 145.7 million in November, with another 173 million queued for December. Now, anyone who's been in crypto for more than a week knows what massive unlocks typically do to price. Luna's death spiral, Aptos bleeding after unlocks, Solana's painful dilution periods. The pattern is crystal clear. More supply equals downward pressure. But here's where it gets fascinating. Pi is trading at 22 cents right now. During November's unlock of 145 million tokens, the price didn't crater to 10 cents or 5 cents. Instead, it's oscillating between 18 cents and 22 cents, showing consolidation behavior that typically precedes expansion moves. Think about what this means. Sellers are dumping. New supply is entering the market daily, yet buyers are absorbing everything without letting the floor collapse. That's not retail behavior, that's calculated accumulation. Alright, so the technical picture really supports this. Pi has established a solid support base at 18 cents, tested it multiple times, and bounced. Meanwhile, resistance is sitting between 30 and 35 cents. The longer this consolidation continues while unlocks happen, the more explosive the eventual breakout becomes. Interesting, right? Now, let's talk about why smart money might be accumulating despite the unlock pressure. The answer is just one word: infrastructure. It's a key factor here, folks. So, Pi Network's decentralized exchange isn't some distant dream anymore. The on-chain evidence is overwhelming. Proposal 20 passed community voting, multi-sig 15 executed successfully. The DEX smart contract transitioned from lock to unlock status. These aren't rumors from Telegram groups. These are verified blockchain transactions. That's pretty solid evidence right there. Based on transaction pattern analysis and historical deployment timelines, the probability window for DEX activation sits between November 20th and 22nd. Confidence intervals range from 82.7% to 92.4% depending on which analytical model you apply. But why does this matter for price? Currently, Pi trades on venues with questionable liquidity and opacity. You can't get reliable price discovery when trading happens in fragmented markets with varying levels of trustworthiness. Transparent liquidity pools, verifiable trading conditions, real-time price discovery through automated market makers. This is the difference between trading in a dark alley versus trading on the New York Stock Exchange floor. Let's look at some historical comparisons. When Uniswap launched, it didn't just provide a trading venue, it actually legitimized DeFi, and when PancakeSwap activated on Binance Smart Chain, it totally catalyzed an entire ecosystem. Now, Pi's DEX activation follows this playbook, but with one critical difference: they already have a user base of millions just waiting to interact with it. Hey, before we continue, if you're finding value in this analysis, go ahead and smash that like button right now. It really tells YouTube to share this with more people who need to see it. And if you're not subscribed to TJ Crypto World yet, hit that subscribe button and turn on notifications. I'm dropping deep dive analysis like this every week, and you definitely don't want to miss what's coming next. The DEX activation isn't just about trading Pi tokens, it's actually about unleashing developer activity that's been bottlenecked for months. Once the DEX goes live, developers can establish trust lines, create liquidity pools for custom tokens, and deploy entire DeFi protocols on Pi Network. This, honestly, transforms Pi from a single asset blockchain into a full spectrum DeFi ecosystem. Think about what happens next. Gaming projects building on Pi can launch their own tokens with immediate liquidity. NFT marketplaces can integrate native swaps. Lending protocols can establish their pools. Every one of these developments increases utility, which increases network activity, which increases demand for the native token. The current price stability despite unlocks suggests the market is already pricing this in. Sophisticated traders understand that short-term dilution matters less when medium-term utility is about to multiply. Let's put some numbers on this. If Pi maintains current price levels through December's unlock, that establishes an 18 to 22 cent range as the new floor with nearly 320 million additional tokens in circulation. Once selling pressure from unlock subsides in January, and the DEX is operational with growing daily volume, the path to 35 cents becomes the first logical target. Breaking 35 cents activates the next technical zone toward 50 cents. And if the DEX launch coincides with broader crypto market momentum, 50 cents could just be a pit stop rather than a destination. So, here's the contrarian angle that, honestly, most people are missing. Everyone is super focused on unlock fear right now. The narrative out there is that dilution equals bad. But what if the unlock phase is actually The accumulation opportunity. Institutional players, they don't buy tops. Instead, they accumulate during times of fear, uncertainty, and doubt. They buy when retail is selling. They accumulate when the narrative is bearish, but the fundamentals are quietly building in the background. The data, well, it suggests this is exactly what's happening with PI. Retail pioneers who earn tokens are selling into the unlock, and that's just natural profit-taking behavior. But those tokens aren't vanishing. They're being absorbed by buyers who really understand the post-DEX landscape. This creates an interesting dynamic. By the time retail sentiment shifts positive, by the time YouTube is, totally flooded with Pi Network to $1 videos, by the time your uncle asks you about Pi at Thanksgiving dinner, the accumulation phase will be over. The question you need to ask yourself isn't will unlocks crash the price? That was the November question, and honestly, the market already answered it. The real question is, what happens when unlocks end, DEX is live, and utility starts compounding? Let's be real about the risks because, well, no analysis is complete without acknowledging what could go wrong. First, DEX delays. If the November 20th to 22nd window passes without activation, short-term momentum could stall. The on-chain data suggests this is unlikely, but, blockchain development has a history of missing timelines. Second, broader market conditions. If Bitcoin enters a correction phase or macroeconomic conditions deteriorate, Pi won't be immune. No altcoin survives a bear market unscathed. Third, execution risk. Having a DEX is one thing. Having a DEX that works smoothly, attracts liquidity, and generates sustainable trading volume is another. The first few weeks post-launch will be, honestly, critical for establishing credibility. But here's the thing about risk. It's always present. The question is whether the potential reward justifies it. Based on current price levels, technical setup, and upcoming catalysts, the risk-reward ratio appears favorable for those with appropriate position sizing and timeline expectations. So, there you have it. Crypto fam. Pi Network is navigating one of the most intense unlock schedules in recent crypto history, yet the price action suggests accumulation rather than capitulation. The DEX activation represents a fundamental shift in utility and legitimacy. And the technical setup points toward 35 cents as the first meaningful resistance zone once momentum builds. Whether you're bullish, bearish, or just watching from the sidelines, this is a case study in how markets sometimes behave counterintuitively. The herd expects crashes, smart money prepares for breakouts. If this analysis provided clarity, hit that like button one more time and make sure you're subscribed to TJ Crypto World. I've got deep dives on emerging Layer 1 projects, DeFi protocol analysis, and altcoin opportunities dropping throughout the week. Check out my previous video on Layer 2 scaling solutions. It's the perfect complement to today's discussion and will definitely sharpen your understanding of blockchain infrastructure plays. Until next time, stay sharp, stay informed, and remember, in crypto, the obvious trade is rarely the profitable one. This is TJ, and I'll catch you in the next one.